Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to leave a 5-star rating and review. Okay, folks, we have a big update around the Clarity Act. So, the White House has met with law enforcement groups to resolve the Clarity Act objections, with Senate Majority Leader Toon suggesting he may bring the bill to a floor vote in July, whether Democrats are ready or not. Now, we heard just last week from Senator Cynthia Lummis that this bill will be making its way to the Senate floor in July. So we're expecting some action. The ball is rolling on many fronts here. Obviously, there's no guarantee that this bill passes, but fingers crossed that it's able to. And, we could see some sort of relief rally with the market, not a move to new all-time highs, but just a strong relief rally. So the White House has invited law enforcement organizations objecting to the language of the U.S. Senate's crypto market structure bill to sit down for a meeting on Monday, according to a person briefed on the plan, which is meant to iron out objections over the way the legislation protects against illicit finance. The tension is focused around the Digital Asset Market Clarity Act section known as the Blockchain Regulatory Certainty Act, in reference to earlier legislative effort. That section, 604, seeks to ensure that software developers who don't mean to ultimately control the tools they're enabling can't be held legally responsible as money transmitters, considered a vital protection for developers to continue creating decentralized finance projects, also known as DeFi. So DeFi is still a holdup here. And you can imagine the banks like Jpmorgan and others are the ones pushing against this. We saw Citadel's letter to the SEC about DeFi and much more. The banks want to continue to control these things. They are clearly building with crypto. We're going to talk about Jpmorgan in a bit, but this is certainly, the banks fighting back. So groups such as the National Sheriff's Association said they have significant concerns with the language, despite other law enforcement officials voicing some support. Here's a quote: "No good reason supports giving mixers, tumblers, and DeFi a blanket exemption," the sheriff's group said in a May letter to the leaders of the Senate Banking Committee. While some software developers are not engaged in money transmitting or other activity that should subject them to the BSA regulation, plenty of others are. So this is where they're trying to regulate DeFi the wrong way, but they don't understand this is decentralized, right? You can't, who do you go after to when no one's controlling that asset? Now, they can do their job and go after the bad actors, trying to use blockchain analytics firms and, plugging into the blockchains and tracking the transactions and going after the bad actors. But, trying to say, hey, a wallet, a decentralized wallet or a tumbler or a mixer is doing nefarious activities is ridiculous, right? But again, this pushback is coming from the banks. So we got, some conversations and dialogue going here. We'll see how it pans out, but I'm happy this is happening despite you do have some pushback, but this is all part of the sausage making process. So let's see what happens. And it looks like this bill is definitely going to be making its way to the Senate floor in July. And that's very good news. And let's hope it passes. Now, I just mentioned the banks fighting back and Jpmorgan, specifically Jamie Dimon. We've seen him come out against Brian Armstrong and the Clarity Act as well. So we got an update here that Jpmorgan urges strong safeguards as Congress weighs crypto market structure rules. The bank says Congress should pair regulatory clarity with safeguards as Senate negotiates the Clarity Act. So clearly, the sheriff's association being backed by Jpmorgan and the banks and Jamie Dimon, right? They're trying to stop as much as they can, not only DeFi, but also stablecoin yield. They're fighting that tooth and nail. So we're in for a fight. And there's also the ethics piece. We haven't seen a lot of that recently, but you can imagine that's coming up, right? Elizabeth Warren and Maxine Waters and others, they're going to bring that up. But we have a bigger issue with ethics because Congress can trade stocks, the president can trade stocks, all these things. So it's not just crypto. They're trying to single out crypto, but it's not a crypto specific issue. Guess what? Members of Congress can transact in information that they may know about the stock market, gold, oil, and let alone crypto, right? So there's a bigger issue here. So I'm not going to read everything that Jpmorgan is saying because, again, we know their MO is they're the incumbents. They're getting disrupted and they're trying to control crypto because they are building with the technology and launching crypto investments, but they don't want to give up control, right? That's what it's about. They want to keep getting those big fat bonuses at the end of the year while paying out consumers next to nothing, 0.04% on your interest on your money, right? While they collect the majority of the 4% that they are earning at the Fed, parking your money and their money at the Fed. So this is where you can go earn more on stablecoin yield, and they don't like that. Not to mention DeFi, they don't like it. You can transact without a middleman like Jpmorgan. So that's what's happening. And here's an example of how Jpmorgan's building with the technology. So today we got a report that Jpmorgan broadens blockchain settlement network as banks modernize cross-border payments. Guess what? This is all because of crypto and stablecoins, right? So JP Morgan has their Connexus system, and they're obviously plugging into public blockchains as well. So JP Morgan has expanded the number of currencies supported on its Connexus blockchain payments platform, a move that could make it easier for multinational companies to move money between countries at any hour of the day. The bank added the Australian dollar, Hong Kong dollar, Japanese yen, Chinese renminbi, and Singapore dollar to Connexus blockchain deposit account network, a feature that lets clients move tokenized bank deposits over the platform. The new additions join the US dollar, euro, and British pound, giving institutional clients access to 8 currencies for blockchain-based settlement and foreign exchange. So you see what's happening here. Many of you may bank with JP Morgan, right? The funny thing is that there's a lot of crypto naysayers out there and their own banks are building with the technology, but this is why education is so important. So they're clearly building with the technology because it is the future. I've been saying for many years, the future capital markets, economies, and governments will all run on blockchain rails. So JP Morgan, while fighting the parts of the Clarity Act that they can't control, they are still building, right? With the technology, they're still plugging in different crypto assets into their investment portfolios, and for their clients, they're still utilizing public blockchains. And they would love to have their wall garden blockchain dominate the market, but unfortunately, this is the free market, and the public blockchains are growing in adoption. And Jamie Dimon doesn't like it, folks, but disruptive technologies here, and it always wins. So we got a little bit of a battle on our hands, but we are still seeing validation of the technology from these big institutions. And here's another example. BlackRock pushes deeper into DeFi with Ethena integration, sending the ENA token up 8%. So BlackRock's doing a lot with different altcoins. If you guys recall, if it was just about like 6 months ago, they announced they were investing in Uniswap, the decentralized exchange, obviously very DeFi driven. So they're doing a lot. You have their Bitcoin and Ethereum ETF, of course. They're custodying reserves for Circle's USDC. They have a tokenized money market fund. So it's incredible to see the world's largest asset manager doing this. So Ethena said its yield generating synthetic dollar token will be integrated into BlackRock's Aladdin risk management platform as the crypto protocol is deepening its relationship with traditional finance firms. The Monday announcement sent Ethena's governance token ENA up about 8% on the day as investors welcome another high-profile institutional partnership. Aladdin is BlackRock's portfolio construction and risk management platform used by banks, issuers, pension funds, and asset managers overseeing more than $20 trillion in combined assets. Ethena also said BlackRock's tokenized money market fund BIDL will serve as a primary reserve asset for a forthcoming white label product. Guys, look at what's being built here, right? With different blockchains and altcoins for those respective blockchains. Now, I don't own the ENA token, but if I'm looking to take a bet and add more coins to my portfolio, I'm going to look at what BlackRock's building and adopting, right? Because that has high potential. So I may want to look at adding the ENA token to my altcoin portfolio, even Uniswap. I'm not saying you must do that. That's not financial advice. I'm just giving an example of the thought process. Now, that's not the only factor you want to look at. You want to look at the chart. You want to look at the tokenomics. You want to look at, have they been building and doing a lot of things? Because just because BlackRock integrated this and is adopted, it doesn't mean it's going to perform well. But this is certainly adding to the case of a why you should, right? In addition to the list of other considerations. So the firms also unveiled a $100 million liquidity facility that will allow eligible holders of BlackRock's tokenized treasury fund BUIDL to exchange their holdings for USDC, USDTB, and other supported stablecoins outside traditional market hours and convert those assets back into BUIDL. The infrastructure being built here, folks, incredible stuff, and just amazing what's happening. All right, moving ahead, Ripple wants institutions to borrow against tokenized assets on the XRP ledger. So Ripple is pushing to add a lending layer to the XRP ledger, the blockchain behind XRP, in a bid to let institutions borrow against assets they hold on-chain rather than just issue and move them. So they're building an on-chain lending protocol essentially, which is really great. We've been seeing a lot of developments on the XRP ledger. I recently interviewed the head of engineering at RippleX. Many of you may have seen that interview, Ayo Akinyele, and we talked a lot about this. So the proposed XRPL lending protocol, a copy of which was shared with CoinDesk, is built on a simple split. The blockchain handles the mechanics of a loan once it is agreed, how money is pooled, how interest adds up, how repayment is enforced, and how a default is processed, while the actual credit decision, whether a borrower is good for the money and on what terms, stays with the lending institutions off the blockchain. Its pitch is that a blockchain is good at enforcing rules consistently, but cannot judge credit worthiness or navigate the rules that differ by jurisdiction, so that judgment should stay with the people who do it now. The protocol has two parts: a single asset vault pools a single asset, and the lending layer turns that pool money into loans and set terms. Both are still proposals defined in technical drafts known as XLS-65 and XLS-66 and remain subject to approval by validators who run the network. The features are available to test on a development network but are not live. So that's the nature of a decentralized blockchain. You need the validators to weigh in, right, folks? So big news here for the XRP ledger. I am an XRP token holder, so all this is great stuff. And folks, a great place where you can invest in XRP, Bitcoin, and other altcoins is on iTrustCapital. You can also invest in precious metals like gold and silver, and you can do it via an IRA. Now you may say, Tony, why would I want to invest via an IRA? I use exchanges and much more. Well, IRAs give you huge tax advantages. So many of you know when you sell your crypto for a gain, you incur capital gains taxes, whether it's long or short term, right? Obviously, long term is better because you pay less taxes, but nevertheless, you have to pay. Well, but if you do this in an IRA, you don't have to pay those taxes. So that's the great benefit of an IRA. And if you can have a split strategy, you know, some of your investments via normal exchanges, some for a long-term view, you do it via the IRA where it's sheltered from those taxes. And you can buy and sell these assets 24/7. So you have all the major crypto assets, even new ones. They list new altcoins. They support staking, stable coins as well, such as Ripple's RLUSD, Circle's USDC. And you can buy and sell these assets 24/7. It's low cost and no monthly fee. And the gold and silver, by the way, it's not paper gold and silver. It's the physical asset. So if you want to redeem it at any time, you can do that. So it's custodied at a bank. So that's a really great option. Not many platforms offer that. Now, the other great solution they have is called a premium custody account, which uses institutional grade crypto custody. So you can sleep at night knowing your assets are safe. So I believe this is the second safest way behind self-custody to custody your assets, because it's with Coinbase Prime and these big institutions. BlackRock uses Coinbase Prime. So you would have your assets custodied at the same place BlackRock does, right? So you can go in and out 24/7. It's a closed loop system, low fees. So the closed loop system, if someone hacks into your account, they can't withdraw any funds. It is set up where it only goes to your bank account. So again, top of the level security and institutional custody. And folks, I have a personal representative who you can talk to at iTrustCapital. So let's say you sign up with my link, which will give you $100 funding bonus. If you want to talk to a representative, I'll put the contact information in the description. His name is Ryan, and his email will be in the description. So, if you want some hand holding, you want to get some more information as you sign up, that resource is there for you. So again, you sign up with my link, you get $100 funding bonus, plus you have the hand-holding service. And you can go to iTrustCapital.com/go/thinkingcrypto to learn more. Link will be in the description. Okay, moving ahead. Wall Street's BNY expands stablecoin services for institutions, starting with Circle's USDC. So BNY, America's oldest bank and the world's largest custodial bank, going all in on crypto, right? And they're building the infrastructure here. So the bank said Monday that USDC will become the first stablecoin supported on its digital asset custody platform. Clients will be able to hold USDC in custody at BNY and instruct Circle to convert US dollars into the stablecoin or redeem USDC backed into dollars through the bank. The move expands BNY's role in the USDC ecosystem. The bank already serves as the primary custodian of the reserves backing the stablecoin. The new offering lets institutions manage both their cash and digital assets through a single platform. BNY said it plans to support additional stablecoin issuers over time. Guys, look who's getting involved. This is news you want to share with the crypto skeptics and the naysayers, right? Who are like, oh, it's all fake money, it's Ponzi. They haven't educated themselves. They just read headlines or they take secondhand information versus going, let me spend a good 10 hours researching this. Let me read the white papers. Let me understand block. They haven't done that. So you want to send this to those skeptics, right? The biggest banks in the world, the world's largest custodial banks, America's oldest bank, helping to build the infrastructure for the token economy, guys. Incredible what's happening. All right, moving ahead, UK officially unveils crypto regulations and cuts capital requirements for stablecoin issuers. So we know the EU, they've released their MiCA regulation. Well, the UK, they have obviously exited the EU, so they have their own jurisdiction going on, and they are unveiling their regulations and they're loosening up their requirements for stablecoin issuers. So again, the global movement towards crypto adoption, guys. Don't miss what's happening right before your eyes. I know price is down right now, but we are in a bear market. Markets are cyclical. We're near the bottom, and then we'll be out of it soon enough, and we'll be back in a bull market. And the biggest on-ramps we've ever seen in crypto are being established, not to mention the legislation, which will allow more capital to come in. Look at this. Ukraine transfers $8.3 million in seized USDT stablecoin into state management as it explores a national crypto reserve. Very interesting. So an easy place for all these countries to start with is the assets they've seized from bad actors or whatever it may be and put it into the reserve. Doesn't really need any type of major approval. They don't have to buy anything or, anything along those lines. Obviously, the hard part is to get legislation passed for them to buy assets. That's what the United States is trying to do right now. We have some Bitcoin reserve bills, but obviously that's going to have to be shelved until the Clarity Act is passed. But eventually, guys, and it could be by the next cycle, right? It may take another 5 years or whatever before they put into law the ability to buy these assets. I think we see the puck is heading there. They're establishing these reserves with the assets they already hold on the books. Very, very interesting. Now, crypto analytics firm Chainalysis proposes standards for blockchain tracing. I interviewed the founder and CEO of Chainalysis, I believe it was earlier this year, if I'm not mistaken. But they're doing some great work, guys. This firm is helping governments and companies to be able to track what's happening on the blockchain to better offer services, but also as a stop bad actors. So Chainalysis is one of those companies you want to pay attention to. So tracking funds on a blockchain has typically required specialized tools, and the process can sometimes be opaque. But crypto analytics firm Chainalysis is taking a swing at solving that problem. The company rolled out an ontology outlining how investors can trace funds to wallet clusters and identify which wallets might be under the control of the same entity, in hopes of creating a standard that law enforcement entities can use in investigations, it said in a blog post published Monday. This is great. We want the bad actors to be stopped. So we want the law enforcement officials to have this stuff, right? That they can track it. And this goes back to how we started the podcast talking about the pushback on DeFi and much more. DeFi is not the problem. The law enforcement officials need to use technology like this and go after the bad actors. So This is really great that we're seeing this update. So Jacob Elam, chain analysis chief scientist, told CoinDesk on a call that the ontology is aimed at establishing standards for blockchain analytics to reassure investigators or prosecutors about the usefulness of the data they might use in a case. So really, really great. All the pillars that are needed for the asset class to grow are being established, right? The regulations, the analytics and data metrics, mining, and much more, right? To monitor these things appropriately, the custody, the infrastructure for capital to go in and out, all the respective pillars are being established. It's really, really great. Now, today we got an update from Michael Saylor with Strategy. They have launched a Bitcoin monetization program that allows the company to sell Bitcoin to fund operations. So we knew this was coming. Saylor, of course, lied for years, right? I've called him out. Myself and Amanda have had done a podcast talking about it. We need to call it out because if you lie, you got to be called out. Because he was telling people, don't sell your Bitcoin. We're never going to sell as well. And then now he has to sell. And instead of owning up to it, he lied. I'm sure you guys have seen the clip where he's like, I never said Strategy would never sell his Bitcoin. I said you should never. Pathetic, right? But looks like he's going to go on some sort of selling spree here. This is to help with the payments he has to make on Stretch, which has depegged from $100. And I'm not saying it's a Ponzi, but it has some Ponzi attributes. You guys know what I'm talking about, and I'm not a fan of what Saylor's doing here. He is levered up, and he took a great asset, and he's putting a lot of risk around the ecosystem. So hopefully he doesn't collapse, even though I don't like what he's doing. I'm hoping he doesn't collapse because that would be bad for the price and everything that's going on in the market. So let's see what happens, but he's going to sell. Apparently he's going to sell up to $1.2 billion of Bitcoin to build the company's USD reserve. So we shall see how this all pans out. Now, guys, I recently told you all about Securitize, the tokenization firm. They're looking to go public and they're going to do it via SPAC merger. Well, it looks like there's some approval from the investors. So it looks like that's going to happen this week on Thursday, July 2nd. And it's going to be in the New York Stock Exchange. So I'm happy to see this. I just think the timing of them doing this is a bit weird in the bottom of the bear market. But hey, look, maybe they know something I don't. But like I always tell you guys, I don't buy into, IPOs and companies going public because the price pumps, right? The insiders take their liquidity, they exit, and you don't want to be the exit liquidity. You wait till it crashes back down. You just look at SpaceX stock. I was telling you guys, I'm not buying that when it goes public. I'm going to wait for that thing to crash down. Then I'm going to load up, right? Because I do believe in SpaceX and the future of space exploration. I'm a Tesla stockholder as well. So you don't have to invest in those things. I'm just saying, things that I believe in and what I'm paying attention to. So Securitize, would I want to grab some of their stock? Yeah, but I ain't buying the day of the debut, right? I hope by now, if you've been a viewer or listener of this podcast, that you've learned some of those investment tricks, right? You don't buy into green candles. You don't buy something when a company goes public. You wait for that sucker to crash back down. There's blood on the streets. All the hype has died down. Then you back the truck up and load up, right? Gives you the best potential to make more upside and returns. Even if your strategy is not long term, it could just be like, you're not looking at a 5 to 10 year window, but maybe you're like 1 to 2 years. Obviously, the lower price you get in at, not buying into the pumps and the hype, and then you wait for the recovery, right? Obviously, you got to take other things into consideration, look at the chart analysis and so forth. Are we in a bear or bull market? All those things. So, really great. Happy for Securitize. Great firm. I've interviewed Carlos Domingo and a bunch of other folks from there, and it's really awesome to see that they're going public. So we'll see how that goes on Thursday, and hopefully it's a good one for them. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Please be sure to subscribe to the free email newsletter on Substack. It is 100% free. I put a write-up out today, so check it out, guys. Again, it's free on Substack. Grab a copy of my book on Amazon. It's available in paperback and digital. Check out my course at mycryptocourse.com. Folks, if you want to learn about crypto, blockchain, tokenization, and much more, this is the course for you. It's comprehensive, features expert commentary. No other crypto course offers that. Right now, we got a huge sale going on. Get 50% off the price of the course by using the code BEAR, BEAR at checkout. So visit mycryptocourse.com to learn more. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.